everyone, K Kim here. Today is December 8th, 2017, Friday. Kind of a late afternoon. Market should be open another hour and a half as I record this video. Welcome to the market update. Again, my name is K Kim with the Traders Club. Today we're going to be looking at, let's look at all the indices, Spider, Diamond, Qs, IWM, IYT Transport, Semi, and then XLF, and just kind of see how they're doing on minor term, and then we'll kind of see what have happened this week and what we can forecast going into next week. And something I've been talking about is that I believe a 5% correction possibly coming. I'm not sure if it's this month or next month, but I believe it's looming. But at the same time, I want to give benefit of the doubt to the buyers because I think market could keep grinding higher. So this is obviously, not a level that, to short heavily, because obviously nobody's know where the top is. But this is a level, I believe, that as the market continues to grind higher, if you have positions that you're holding and they have been advancing well, you can able to unload some of those positions. That's kind of what I've been doing this week, kind of unloading some of the positions they've been doing well and taking profits. But again, at the same time, but I'm not putting any short positions on. I'm not like, oh my God, I'm gonna, because why try to make money on a 5% correction, right? When you can make money on a move like this. Look at some of the moves. I mean, you got 15% move, you got 10% move, some of these dips. It's much, much easier to make money on a pullback than trying to profit from the pullback, right? Again, let me say this different way. Like, it's much easier to make money after the pullback than trying to make money from a pullback, because it's very, very difficult to forecast when the pullback is going to happen. But it's actually not that hard to see where the certain level that you could look at as a potentially level to buy the dip, especially when an uptrend, right? So let's continue to give benefit of the doubt to the buyers in the overall market, but let's also at the same time understand that we are extended on the S&P and the Dow. And so here, let's look at the Spider here. I did put back in my 10 EMA now that market is kind of getting into extended sessions here. 10 EMA, that's where we found support. When we saw the volatility, we found buyers coming in 10 EMA, and then we saw that kind of a bearish dark cloud cover or bearish engulfing candle type of candle there. We pulled back for a couple days. We found support at that 10 EMA. Isn't that interesting? We find support 10 EMA exactly, and then we saw a gap, but we're kind of heading back up here. So I think we're trying to, let's see how, let's put that line right here, 266.30. Let's see if we come trying to get back up and retest that level, right? So it looks like that's kind of what it wants to do. And let me just look at my other screen, see if there's anything that I should be aware of. No. So yeah, again, we're holding that 10, and so let's continue to give benefit out to the buyers. We got the 10 EMA there, we got the 20 EMA there, we got the 50 EMA there. So those are the levels to watch. And again, that's how this market moves. When market starts to get into, this uptrend, right? You can see same thing happen. Got up, hit 10. So how? I mean, seriously though. A lot of people tell me, not they tell me, but I hear sometimes like moving averages are useless, like technical analysis is useless. Really? I mean, how can you say that when you see it held the 10, got up, held 10 again, got up, held 10 again, got up, it held 10 again, and when we did see intraday volatility, we found support at 20, got up, came down, held the 10, got up. When we lost the 10 here, where did it come down to? 20. And then it got up, and then we pull back a little bit here, right there, held the 10, and got up, went just pretty much straight up, and then we saw the volatility, got back up, pulled back down, we held the 10 getting back up. I mean, if you didn't know anything about technical analysis, right? Anything about technical analysis, if you just knew these moving averages, then you're able to trade this well in last, you know, since August, as it continues to respect these levels. So, so let's continue to give benefit of doubt to the buyers in the minor term, intermediate term, and primary term, as we see these moving averages continuing to expand, and the market continues to respect those levels. Let's go to Dow. Same thing. Dow held the 10, got up, lost the 10, the 20 was there, got up, pulled back, we're holding the 10. Where's the top? I don't know. I don't know. Nobody knows where the top is. You know, a little bit of bull flag, a little bit of flag there, a little bit of a sideways pennant there, you know, flag again. I mean, look at that. Just boom, boom, boom. So as long as it continues to, you know, hold these moving averages, I guess we'll have to continue to give benefit of doubt to the buyers, right? Are we extended? Yes. Are we extended? Yes. But how long can we stay extended? Well, let me show you something about Dow. I want to show you this. How long can... Are we like in overbought sentiment, like overbought condition? This is a monthly chart, guys. Monthly chart of Dow Jones Industrial Average. Okay. What I want to show you is this. Okay, if that's overbought, how long did it stay in overbought? For how long? How long is that? 2012 May. 2015 May. 3 years. 3 years. It just kept grinding, right? It didn't roll over, but it kept grinding. We're just now re-entering. Okay, look, even if you can look at this as like a support, we're now re-entering that overbought sentiment. How long can it keep grinding like that? See what I mean? Keep in mind, this thing has broken out of this channel, this rising channel right there, and it's just breaking out. And that's a very, very good look in a long-term perspective. But we are getting, obviously we're getting into extended sessions, possibly pull back, but nobody knows when, nobody knows how, nobody knows where. So let's, again, give benefit of doubt to the buyers, but understand that we are extended. Possibly a you know, correction is coming. Let's go to Qs. Yeah, so Qs held that, right? Right there. Yeah, so Qs getting back up here. We're back above the 10 and 20 now. Are we seeing head and shoulders? Left shoulder, head, right shoulder. See, I don't want to give a lot of credit or a lot of weight on that yet until I see some evidence, right, of that actually happening. Because how many times, you know, well, that's the head and shoulder, that's head and shoulder, that's left, right, you know, that, and then you just did that and just went right back up, right? Well, that's a triple top. Well, you just went right back up, right? Well, that's a double top. Well, it just went right back up. You see what I mean? Well, that definitely looks not healthy, K. That definitely does not look healthy and just went right back up. So we have to continue to give benefit of the doubt to the buyers. I know I sound like a broken record, but that's how it's gonna be. That's how it's gonna be extremely difficult to just look at this and this is gonna be head and shoulder. Let's say if this thing started to come down and then, you know, start retest neckline, started falling, and then start to break below these levels and below 100 SMA, start to cultivate lower highs and lower lows, then we're in a bear market. But we don't even have a lower low and lower high. We're still in a higher highs and higher lows. Let's go to Russell 2000. Russell 2000, a little bit of fib right there, right? Find support right on that 50. Gotta love that 50 retracement right there, right? Kind of near the 20. We're getting above the 10 right now. Yeah, so let's see if that level holds. But this is also the level. Can do something like that. It's overshot a little bit to the downside, but right there, prior resistance acting as new support near to the 50% retracement and the 20 MA, right? Just looking at my other screens, everything looks fine here, but I mean, right here looks a bit, to me, that looks a little bit hectic. Like it looks like it's gonna maybe consolidate, some shenanigans, a lot of ups and downs. It just looks a little bit hectic here in the minor term, but we're holding up. We have a higher lows and higher highs. So let's give benefit of doubt here. Got higher high, low. Is it potentially a higher low before going higher, make new highs? Or are we gonna fizzle and then pull back? Or are we gonna consolidate and then break out? We'll see how that plays out. Transport. Yeah, so transport. Broke out. A little bit of fib here and here. Got up, pull back. Last level of fib. Made a run, and we're hitting the 138.2% extension level. And just, you know, we pull back a little bit with the shooting star candle, but we're right back at it. We got a morning star, shooting star, morning star, and then right back at the resistance. I think next target is about 161.8%. If we can get back above it. 10 EMA is rising, 20 EMA, 50 EMA, 100 SMA. I think, you know, the overall market, obviously Spider and Dow, they were extremely extended, but I think it was the transport that made a huge move last, you know, month or so. And I think with that rotation happening, because I think if like transport start breaking down, like the banks start breaking down, and then like, you know, then I think there will be a much steeper pullback that would occur on the other indices. But like, you know, transport starting getting back up, and then what happened to banks? Remember what happened to banks? Banks starting to getting back up. You see what I'm saying? Like that happened. And then really also the retail sector, right? Remember what happened to retail last couple of months, last month or so, just kind of went back right back up here. So I think these different sectors are preventing this market to see steeper correction, because whenever we see certain weakness on Spider and Dow, we see like transportation start to moving up, and then we see the banks start moving up. We see like retail sector start moving up. So it's like they are preventing the market from seeing steeper correction. That's what we call rotation. So like basically what's happening is people are, you know, rotating their money, is putting into money where that you know, certain index that has beaten down, and then they're buying these dips, bring it back up. And same thing happened to banks, bring back up the retail sector, bring back up, while they're possibly, you know, rotating that money out of S&P, Dow, and the Nasdaq. And so as it continues to do that, it allows the market to continue to grind higher. You see what I mean? So that's why I keep saying that we have to continue to give benefit of the doubt, and the S&P could very well grind higher. I don't know where the top is. I really don't know at this point. But is this the level that I'm going to start putting on new, fresh call positions? No, hell no. Definitely not. So it's a two different thing. When I say I want to continue to give benefit of doubt to the buyers, it's bullish versus I'm going to go long here. I'm not going long here. I'm not shorting here either. But I want to continue to give benefit of doubt. So then I want to, because I still have lots of long positions that I'm currently holding, but at the same time I've been unloading many of them. Partial position, I've been locking in some gains. So that's kind of the environment that we're in, that we are extended, but their rotation coming. Semiconductor, right? We saw this kind of decline in semiconductor. I mean, and then what if we saw about 8% decline, but what if we start to see, yeah, that was about 9% or so. What if we start to see semi starting getting back up? So then that is also going to prop up the market. And then that more rotations continue to occur. If semi starts to move back up, then it's going to prevent the market from pulling back harder. And then that could make the S&P and the Dow to continue to grind higher. They're going to see, the S&P and Dow and the Nasdaq, they're going to see steeper corrections when you see unanimously when a lot of these indices and sectors start to pull back altogether. But we're seeing some discrepancies where like transport's moving higher, like the banks moving higher, the retail sector moving higher, spiders holding up, the outer holding up, right? While the semiconductor has corrected about 8%, but if it starts to get back up, then that is going to also help the overall market to stay afloat, right? Let's see here. Semiconductors is an interesting level here right now because if I go to weekly, guess where we're finding support at? I'll end the video with this. Look at this. This is a weekly 20, weekly 20, weekly 20. Weekly 20 last time right here back in 2014. Where we came down to right down to weekly 50. Weekly 50. So this is where weekly 50 is. So obviously these two moving averages are very important moving averages to keep an eye on. So, well, that's it for me this week. Have a wonderful weekend and good luck trading next week.